Good morning all, Randal King here. Welcome to our economic stimulus webinar. I'm a senior associate at Marsh Tincknell and have been there for a bit over 15 years. I just wanted to start by saying that I've been in public practice for 35 years now. I've never seen or experienced anything like this before. We're all here to assist you in these really difficult times. All your normal advisors are available to you, just not physically in the office, but we're all working just as hard as we ever have. We're available by Zoom, we're available by email, we're available by phone. And any other ways you can think of. If you think of a better way to connect with us, I'm happy to take that on as well. Today, talking about measures that have been announced by various levels of government over the last couple of weeks. New announcements are being made on an almost daily basis. We will endeavour to keep you up to date with these measures as they're announced and as they're updated. I'm sure there's going to be lots of questions along the way. Please send your questions to the chat box down the bottom of the screen, and I'll endeavour to answer those at the end of the presentation. I'm also happy to respond to private queries after the presentation. We'll send out the slides at some stage today, so if you just want to send us an email or give us a phone call, and I'll try and respond to those questions as best I can. Just bear with me for a sec. Okay, so this is just a bit of a diagram just showing the Zoom features if you haven't used it before. So if you can see just down the bottom, this chat box is where you can ask questions. Darren Bowman is sort of the moderator of this webinar. He'll be checking those questions as we go, and we'll be looking at those at the end of the presentation. So what we're going to cover today, firstly, the main thing I'm going to look at is the federal government stimulus packages. They certainly are the big ticket items that everyone's interested in and wants to know about. We're also going to have a little bit of a look at what assistance the tax office are offering to taxpayers. We're going to have a look at some Queensland government measures, and then at the end I'm just going to go through some questions with you. Okay, the JobKeeper payment. This is obviously very brand new. It was only announced on Monday, and there's still lots of further details to come. There isn't any legislation currently. As I understand, Parliament is going to be recalled in a few days' time to consider the legislation and get it passed, which I wouldn't think would will happen quite quickly. I don't think there's going to be any resistance to these measures. But yeah, as a result, we don't have any detail, we don't have any explanatory memorandum that we can have a look at. It's all based on just what's been announced by Treasury less than 2 days ago. So what's been announced, there's going to be a wage subsidy paid to employers who retain their staff. It's going to be paid at the amount of $1,500 per fortnight per employee for a period of up to 6 months. Employers must pass on this amount in full to their employees. If there needs to be any tax withheld, that has to be withheld, and the net amount passed on to the employee. But if you have an employee that was previously getting less than $1,500 a fortnight, you have to pass on the whole amount as a gross payment. Employers can register with the tax office. And I understand hundreds of thousands have already registered with the tax office, so that is available on their website. At the moment, it's just a registration of interest. So basically, you're just providing them with contact details so the tax office can get back to you. Because there's no legislation, there's not actually any application process yet, but there will be soon. And it's envisaged that payments to employers will occur monthly in arrears, and they will start on the first week of May 2020. So in about a month's time. Eligibility. Businesses with turnover less than 1 billion, which I would imagine would be everyone listening today, you have to be able to show that your income has reduced by more than 30%. Businesses with turnover greater than 1 billion have to show that their income is down by 50%. Now it's a comparison with a comparative month 12 months ago. So for instance, the first month that we'll be looking at is the month of March 2020. You need to compare it with March 2019 to determine whether your income has reduced by more than 30%. Like I said, not a lot of detail around that, but that's the announcement that we need to be aware of. Eligible employees will be employees that were on the books at the 1st of March 2020 and have either been retained and are still employees, or you re-engaged them now that this legislation has been announced, proposed legislation has been announced. Again, not a lot of detail, but it does say that will include self-employed people, contractors, partnerships and trusts, as well as companies. So still waiting to see a bit more detail on that, but it is intended to cover everyone basically, so including self-employed people. As far as employees that are going to be eligible, full-time, part-time clearly are going to be eligible, and also long-term casuals. So if you've got casuals that have been on your books for more than 12 months, they are also entitled to this JobKeeper payment to be passed on by the employer. It applies for Australian citizens naturally, but there's also a range of different visa categories that it does also, are also eligible as employees. In particular, I think our New Zealand cousins from across the ditch, if they're working in Australia, they're also included in this system. You can't receive both the job seeker payment and the job keeper payment. So the job seeker payment is what was previously called New Start Allowance, so unemployment benefit. You can't get both. So if the employer registers and advises the employee that they will be getting the JobKeeper payment, then the employee will need to advise Centrelink that they're getting this income and will probably be no longer able to receive the job seeker payment. Where there are multiple employers that an employee works for, they're only allowed to receive this payment from the main employer. So yeah, like I've said, not a lot of detail around this. Yeah, I'm sure there's going to be lots of questions, some which I'll endeavour to answer, some which it's just going to have to be a sort of fairly general response. But yeah, there's been a lot of positive feedback on this, as you know, clearly it will help out employers to retain staff. But yeah, so still not a lot of information, but we'll sort of get that out to you as it comes through. Okay, the next one I wanted to talk about is the cash flow boost for employers. This again is just another way that the government sort of thought up to try and reduce the cost of retaining your employees. So it's going to be a credit to your business activity statement, and it'll be based on the amount of pay-as-you-go withholding tax that you withheld from your employees. is going to be provided in 2 phases, which I'll talk about in more detail. Employers that are going to be eligible are going to be those that have an aggregated turnover of less than 50 million. So again, that's probably going to cover most of the people out there today. Businesses must have had an ABN on the 12th of March 2020, but also they must have derived business income in either the 2019 income tax year and lodged that tax return by the 12th of March. Or if they haven't lodged the 2019 tax return, alternatively, if they have made sales in a previous period since the 1st of July 2018 and lodged an activity statement for that period. So a period of nearly 2 years, if they've lodged an activity statement by the 12th of March for any of those periods, that gets you into the eligibility. So the way it works for the first phase, the credit is based on the actual amounts withheld from salary, wages, etc. So the actual amount withheld from that salary. For quarterly lodges, the support is going to be equal to 100% of the amounts withheld from employees in the March 2020 activity statement and the June 2020 activity statement. So those 2 quarters. For monthly lodges, because the monthly lodges would have already lodged January and February, what they're doing is they're looking at the March monthly activity statement and saying, instead of giving you 100% of the amounts you've withheld, we're going to give you 3 times that amount, 300% of the amounts you've withheld, so that it's equivalent to what's happening with the quarterly lodges. Plus, from there on, you'll get 100% of amounts withheld for the April activity statement, May activity statement, and the June activity statement. There's also a minimum amount of $10,000 for eligible employers. So what that means is, if the amount you withhold in the March activity statement ends up being less than $10,000, you will get a credit of $10,000 in your activity statement. So yes, it's just a minimum amount that you'll get in your first activity statement. If you have more than $10,000 in that first activity statement, then there's a maximum amount of $50,000. Once you get to that $50,000 in any of those activity statements from March to June, that's the limit. There's no more. So minimum 10,000, maximum 50,000. I guess the reason why they've put in a minimum threshold is you could potentially be paying amounts to workers and they're all below the tax-free threshold, or some of them are below the tax-free threshold. So you're not actually having to withhold tax. So that's why they've got that minimum amount. So that's the first phase. The second phase is essentially a credit based on what happened in the first phase. Even if your circumstances have changed, so you might have been employing people in March, April, May, June, or even just in March if you qualify for the minimum amount. But then you've stopped. You've had to close down your business, and you're not entitled to any more credits under the first phase. You will still get this second phase based on what you were eligible for in the first phase. So the way it works, quarterly lodges, they'll receive 50% of that amount that was calculated for March and June. You'll get 50% of that amount in each of the June activity statements and the September activity statements. So for instance, if you've withheld amounts of, say, $20,000 over the periods from March to the end of June, you will get an additional $10,000 also in the June activity statement, and then you'll get an additional $10,000 in the September activity statement. So what they're doing is whatever you got in the first phase, You'll get that again in the second phase, but spread over 2 activity statements. For monthly lodges, same calculation, but instead of it being spread over 2 activity statements, it's spread over 4 activity statements. So you get 25% in June, July, August and September 2020 activity statements. And just a few practical issues around this cash flow boost. You actually need to lodge your activity statement to receive the credit. So obviously there's a big incentive to get your activity statements lodged on time, because if you don't lodge your activity statement, you don't get the credit. That's how it's received. Even if you lodge your activity statement today for March, you're not going to get a credit until the 29th of April. So there isn't really any incentive to lodge early, but obviously you want to get into it as soon as you can to make sure that you do get your credit as soon as possible. Now, if the amount of the credit exceeds any other liabilities you have on that activity statement, you could potentially get a refund. So, for instance, if your GST and your pay-as-you-go withholding was $9,000 and you're getting this $10,000 minimum amount, you actually get a refund of $1,000 on the 29th of April or thereabouts. I think they're saying they'll provide the refund within 14 days of lodgement of the activity statement. However, just need to be careful. If you've got other liabilities in that entity, the tax office are actually permitted to apply that credit against other liabilities. So, for instance, if you had a income tax liability outstanding, they will apply that $1,000 in the example against the tax liability outstanding. But if there's no other liabilities, you will actually get a refund back into your bank account. Credits are tax-free and not subject to GST. So yeah, it's a tax-free amount. You don't need to include it in your income tax return, and it's not subject to GST in your activity statement. Now, the integrity rules is what everyone's been talking about. There are some specific integrity rules that have been introduced to try and prevent artificial or contrived arrangements or schemes where people are, have realised that this cash flow boost is going to be good and try to bump up their wages for related parties or restructure or do something that's totally different to what they've been currently doing, just so that they can get hold of these cash flow boosts. There isn't anything other than that statement. That's what the integrity rule is, that whether there's a scheme or an arrangement. A scheme in the income tax legislation is generally very wide, so just about anything can be a scheme. The tax office have come out and said if they see changes made where previously you've been taking trust distributions or receiving dividends out of companies, and suddenly you start backdating wages in the March activity statement, they're going to go back and look at prior periods and say that if it's wages now, it was probably wages back then. Where's the pay-as-you-go withholding for back then? It's sort of just a big stick that the tax office are waving, I think. Don't know how many people they'll apply it to, but they're just saying, this is what we can do, just be careful. Going forward, probably just want to make sure that any payments or any wages paid to owners or related parties, they're on a commercial basis. They really need to be on a commercial basis. You can't just be working out what the maximum amount is and then working backwards. Also, you need to remember that if you're paying a wage, you need to also pay superannuation on that wage. So obviously you don't need to do that if you're receiving a dividend or a trust distribution, but if it's being paid as a wage, then you need to pay the 9.5% into your superannuation fund, and that has to be done by 28 days after the end of each quarter. Okay, the next measure that I want to talk about is the instant asset write-off rules. So essentially what they've done, the current legislation, or the legislation before this change, was that the threshold was 30,000. So for small and medium businesses, you could buy something for less than $30,000 and write it off straight up. What they've done is increase the threshold from 30,000 to 150,000, provided you buy, install and have it in place between the 12th of March and the 30th of June. They've also increased the threshold for the turnover. Previously it was 50 million, but they've extended it to 500 million to cover a lot more medium-sized businesses. The rules focus on when the asset's first used and installed ready for use. Has to be for a taxable purpose. It can apply to second-hand assets. Just a note though, just be careful if what you're doing is buying a car and exceeds the luxury car limit. You will only get a tax deduction up to the limit, which is effectively 52,347. There's GST on top of that, which you're still able to claim, but there could potentially also be luxury car tax. You can't claim the luxury car tax. You can claim a credit for your GST up to that $5,000 odd limit, but you can only claim a tax deduction for 52,000. You can't claim a tax deduction for $130,000 on a luxury car. It's always only going to be 52,000 odd. Having said that, just look at the type of vehicle that it is that you're buying. It may not actually be a car. If it's not used principally for carrying passengers, it's not a car and it's not subject to the luxury car limit. So some types of commercial vehicles you might still get, even though it might be over that 52,000 limit, you might still be able to get the higher deduction if it's not actually a car, where the luxury car limits apply. There's also some accelerated depreciation rules. So these are designed to be for assets that you purchase, so quite large assets that you don't actually qualify for the 150,000. They're more than 150,000. So you don't get the immediate write-off. But you can claim an accelerated depreciation amount. So it must have been first held or used after the 12th of March and installed and ready for use before the 30th of June. Just be aware, if you already had a commitment to buy this equipment prior to the 12th of March, that won't qualify for these accelerated depreciation rules. It's only for commitments after the 12th of March when it was announced. Taxpayer needs to be carrying on a business in its own right, so you can't go and buy some equipment in a related entity and then lease it to your business entity. It has to actually be acquired in the entity that's carrying on the business. Only applies to new assets. You can't apply it to second-hand assets. Only applies to assets that are located in Australia. And it doesn't apply to capital work. So just be careful, particularly with fit-out costs. A lot of your fit-out costs are going to be capital works, like dividers, walls, anything that's attached to the building is probably going to be a capital work. It's things like computers, air conditioners, floor covering, carpets, etc. Those things are potentially subject to these rules, but not capital works, not stuff that's attached to the building. So the way it gets calculated, if you've got turnover of less than 10 million and you're able to use the SBE pool, you'll effectively get a first year deduction of 57.5% rather than the normal deduction you would get in the pool of 15%. So that's just, you get a outright deduction for the first 50% of the expenditure, and then you effectively get 15% on the other half of the expenditure. And then in future years, if you're using the pool, 30% deduction for subsequent years. For the larger taxpayers with a turnover between $10 and $500 million, it's 50% up front, but you've got to claim the normal depreciation deduction rules. So taxpayers in this turnover category aren't entitled to pool their assets and claim the accelerated depreciation that way. So you have to apply normal rates depending on the life of the asset. And you also have to apply the rate based on the number of days you've held it in that year. So if you've only held it for 1 day, you only get 1/365th of the amount as your normal depreciation. Okay, so the next thing I wanted to look at was income support payments. As you probably saw on the news a week or so ago, with all these businesses closing, there's been huge queues outside Centrelink offices just trying to apply for these new benefits. So there's been expanded access to payments and supplements provided for new recipients that have suddenly have no income. There's been reduced means testing. Effectively, they're only looking at the income that you're earning. They're not looking at your assets. And there's also been reduced waiting time. So basically, other than waiting in the queue and actually getting registered with Centrelink, there's no waiting time as far as being eligible for the benefit. So these are just temporary changes. They're expected to last for 6 months. Once things hopefully start to go back to normal, then these rules will go back to what they were before. There's also a coronavirus supplement, which is $550 per fortnight. So it's paid for the various Centrelink benefits, including the job seeker payment. I understand too that there was an announcement made on Monday that where you've got a couple, one's still working and the other's unemployed, they've increased the threshold for the partner income. So the partner that's actually working can earn up to around about 80,000, a little bit under 80,000, and not affect the entitlements, the income support payment for their partner that's not working. Individuals and households, there's going to be 2 tax-exempt payments of $750 that will be paid to Social Security, veteran and other income support recipients and eligible concession card holders. That first payment was supposed to go out yesterday. I believe that they're starting to go out. And there's also a second payment that will be made from the 13th of July. The second payment won't apply to those who receive the coronavirus supplement, so you don't get both. Next thing I want to look at was the early release of superannuation. We've certainly had quite a few inquiries about this from clients. So eligible individuals are going to be able to access up to $10,000 of their superannuation entitlements before the 1st of July. So from mid-April, they're going to start to be able to access that, and can apply for a second amount of up to $10,000 from the 1st of July until the 24th of September. These amounts will be tax-free and won't impact on Centrelink or Veteran Affairs payments that you're otherwise receiving. To be eligible to get hold of these of your superannuation when otherwise you wouldn't be able to, you have to be unemployed, or you have to be eligible to receive the various Centrelink payments that are available. if they were made redundant on or after the 1st of January 2020, or if working hours were reduced by 20% or more after the 1st of January. If the individual is a sole trader, you need to be able to show that either your business was suspended or there's been a reduction in turnover of 20% or more after the 1st of January. So the only way you can apply for this is via the MyGov website. So it's just the individuals that apply, and you have to do it through the website. The ATO, the process is that they will issue the super fund then with a release authority. I just wanted to stress that if you have a self-managed super fund, you can't just go to the bank account of your super fund and take the money out. You need to go through the process. You need to apply to the tax office via MyGov and wait until they've issued the release authority to the trustees of the super fund, and then that money will be released and you'll be able to take it out of the fund. If you do it without going through that release authority process, the fund will be it will be a penalty. It'll be a non-complying event, and there will be penalties for the super fund. So just be very careful with that. Just quickly, there's been a reduction in the super fund minimum drawdown rate. So if you're drawing a pension out of your super fund, there's minimum amounts you need to have withdrawn from your fund each year. Those amounts, the minimum amounts, are being reduced by 50% for the 2020 and the 2021 years. So this applies to account-based pensions and similar products. People who have already withdrawn the minimum for the 2020 year may be able to deposit it back into the fund, but normal contribution rules will apply should you seek to do that. There's also been reduced Social Security deeming rates for investments that you hold. So these will be as of the 1st of May 2020. There'll be a reduction in the upper rate to 2.25 and the lower deeming rate to 0.25%. So these are as a result of the Reserve Bank reducing interest rates again. So this follows on from that. Okay, the Small and Medium Enterprise Loan Guarantee Scheme. The government is going to provide a guarantee of 50% to lenders for new unsecured loans made to small and medium businesses, where that loan is being used for working capital. So it's for businesses with a turnover of up to $50 million. The guarantee will apply to loans with the following terms: maximum loan size of $250,000 per borrower, loan term of up to 3 years with an initial 6-month repayment holiday. Loans will be unsecured, meaning that borrowers will not have to provide an asset as security. While the government is providing this guarantee, it's still up to the bank, the lender, to make the final decision on whether they think that it's worthwhile making that loan, whether based on what the client looked like prior to this event, would have been able to repay that. So it's obviously relaxed conditions, but it's still up to the bank to decide whether to make the loan or not. And to help banks free up the loan funds to people, to businesses, they've provided a temporary exemption from the responsible lending obligations of banks. So this, again, 6 months is the magic term. It's only going to apply for 6 months, so just a temporary change to those rules. And the Reserve Bank is providing a lot more funding to the banks at low interest, and other incentives for new loans to be provided to small and medium businesses. Also, there's been a relaxation in the bank capital ratio requirements, which also free up the capital. So I just wanted to also say, if you haven't spoken to your bank, banks are generally allowing, they're negotiating with their customers, both business and private loans, and generally providing a moratorium on repayments for 6 months. So if you haven't contacted your bank, I suggest you do go out and contact your bank and talk to them about having your either reducing your repayments or actually having no repayments for 6 months. Also wanted to talk about the apprentice and trainee subsidies. So this was announced again back in the 12th of March. Eligible employers can apply for a subsidy of 50% of wages paid to an apprentice or trainee during the 9 months from the 1st of January to the 30th of September 2020. Employers will be reimbursed up to a maximum of $21,000 per eligible employee, so $7,000 per quarter. Employers can register for the subsidy from early April, so I don't think that's actually open yet, but will be fairly soon. And final claims for this payment must be lodged by the 31st of December. As far as eligibility, subsidy will be available to businesses employing fewer than 20 full-time employees who retain an apprentice or trainee. So it's really aimed at really small employers that are that have apprentices and trainees on their books. That apprentice or trainee must have been in training with the business as at the 1st of March 2020. However, it's also available to employers of any size and also group training organisations if they re-engage an otherwise eligible apprentice or trainee that's no longer working, has been had to have been put off by these small businesses. So if they then get picked up by another employer, that employer will also be eligible for the subsidy. So just be aware of that. There's been some relief measures for companies and directors announced around insolvency, basically. So there's been an increase in the minimum threshold for creditors issuing a statutory demand on a company. So that increased from 2,000 to 20,000. Also an increase in the time that the company has to respond to that statutory demand. That's going to be extended temporarily from 21 days to 6 months. And directors will be temporarily relieved of their duty to prevent insolvent trading, but only with respect to debts that have been incurred in the ordinary course of the company's business. So it's not giving the directors permission to raid the company bank account and incur debts all over the place. It's only expenses that you would ordinarily have to incur for your business. And if it means if you're going to be technically insolvent, then those conditions have been relaxed for up to 6 months. Similar measures have been announced for individuals. So again, the bankruptcy proceedings threshold has been increased from 5,000 as it currently is to 20,000. And again, you've got 6 months to respond to the debtor request rather than 21 days. And also extension of the time frame when you can, that you're protected from enforcement action by a creditor, again from 21 days to 6 months. So lots of businesses are going to be in trouble as far as insolvency is concerned. We recommend that you speak to an insolvency practitioner prior to making a decision as to where you go. If you don't have one that you don't have a contact that can help you out with that, please contact your advisor at Marsh Tincknell and we can put you in touch with someone that can help you out with advice as to the way to go. Okay, getting on to the ATO assistance. So the tax office have put out a lot of information in the last few weeks, just talking about the type of support they're going to provide, but it's really on a case-by-case basis. There's no rules that necessarily go across the whole taxpayer spectrum. Essentially what they're looking at is offering payment deferrals. So if you've got income tax, if you've got GST, if you've got fringe benefits tax, if you've got pay-as-you-go instalments owing, generally they will look at deferring payment of any of those liabilities by up to 6 months. However, just be aware it doesn't include superannuation guarantee. They can't defer superannuation guarantee. It has to be paid by 28 days after the end of each quarter. You can potentially enter into a payment arrangement for superannuation guarantee, but it won't be a payment deferral. With pay-as-you-go instalments, they've said that you can vary your instalments in the March activity statement so that there's 0 instalments payable for the year. That means if you've already paid an instalment for September and or December, you can actually get those instalments back. They will be refunded back to you. Just be aware though, if you're varying your instalments, you won't have any credits to apply when you lodge your income tax return. So it's a great sort of short-term cash flow option, but just remember, if you when it comes to lodging your 2020 tax return, there's not going to be any tax to apply against that liability if applicable. They're also looking at remitting all interest and penalties that have been incurred after the 23rd of January 2020. So yeah, if you've got any interest or penalties, make sure that you contact the tax office and get those remitted. And they're also going to provide low interest payment plans. So if you've got a debt that existed before all this started happening and you want to go into a payment plan, they'll certainly be looking at that. Existing payment plans, you can also look to renegotiate those. So they're quite open to assisting in however they can, and just make sure you're contacting the tax office or contact your advisor at Marsh Tincknell and we'll help you out with that process. GST reporting, this is not actually a measure that was announced, but it's something you can take advantage of, I guess. You may just want to consider changing your reporting cycle for your GST. If you're currently on quarterly, you may want to consider monthly reporting, particularly if you're going to be due for a refund. You want to make sure you get it as soon as you lodge your return each month and not have to worry about waiting until the end of the quarter. Just be aware though that changes can only take effect from the start of the quarter. So today, 1st of April, is the start of the quarter. So you will need to make that decision sort of fairly soon as to whether you want to change to monthly reporting. And you also need to continue reporting on a monthly basis for at least 12 months. You can't just chop and change it every month. You have to stay with the same basis for 12 months. You don't necessarily need to change your pay-as-you-go withholding reporting cycle. So if you're currently on monthly GST quarterly GST and quarterly pay-as-you-go withholding, you could actually change just your GST so that your GST is monthly, but your pay-as-you-go withholding remains quarterly. So just keep that in mind as well. Okay, superannuation guarantee. I guess this has sort of really come about because the tax office are by legislation, not allowed to extend the date that the superannuation guarantee amounts are due by. The payment must reach the fund by the 28th day after each quarter. So for the March quarter, that's the 28th, or I think it might be the 29th because of the 28th falling on a weekend. It has to reach the fund by that date. So with the way processing takes of contributions these days, it probably needs to be there a few days before that. You need to make the payment. If it doesn't reach the fund by that 28th day, you need to lodge a superannuation guarantee statement. You need to fill out the statement, advise the tax officer you haven't paid it in time, pay the interest, and then the tax office pays it to your employee. If the full amount can't be paid on time, you might want to consider just paying as much as you possibly can just to reduce that superannuation guarantee amount. Once you've actually lodged the statement with the tax office, at that point, you should be able to negotiate with the tax office to enter into a payment plan, but you do actually have to lodge the statement first. Just be aware the recently announced superannuation guarantee amnesty won't apply to current or future quarters. It only applies to superannuation up to May 2018, I think it is, when it was originally announced. So yeah, just be very careful with superannuation guarantee obligations. Now, I just wanted to have a look at a couple of Queensland government measures. As we're a Queensland-based firm, that's what we're focusing on. That's where most of our clients are situated. There are similar measures being provided by other state governments and territory governments. So if you're resident outside of Queensland, your business carries on outside of Queensland, just make sure you contact your advisor at Marsh Tincknell, and we'll work with you to work through what measures are available in your particular state. But as I said, they tend to be sort of fairly similar, but just the details a little bit different. So what I'm going to look at in particular is the payroll tax refunds and deferrals, and then also the job support loans. So payroll tax relief. So what's happening for small and medium businesses, which means payroll up to 6.5 million wages paid on an annual basis, you will receive a refund of 2 months payroll tax that you've already paid. You will also then be provided with a tax holiday for the next 3 months, so you won't have to pay tax during that period. So effectively, there will be 5 months where you won't be paying payroll tax. There's also a deferral of any payments due for payroll tax. Nothing will need to be paid until January 2021. For large employers, so payroll greater than 6.5 million, it's the same as for the smaller employers, except there's no additional tax holiday for 3 months. You just get the 2 month refund, but you don't get the additional 3 month tax holiday. Again, deferral dates are the same for larger employers. So to be eligible, it's available for all Queensland businesses that have been directly or indirectly affected by COVID-19. So that is every Queensland business. It's not automatic. You have to actually apply with the Office of State Revenue. You can't just assume it's going to happen automatically. You must apply by the 31st of May 2020. When we send out the slides, I've just inserted the link there, which will take you through the website where you can make your payroll tax refund application. Or if you need some assistance, just make sure you contact us so we can help you out with that. Just note that you must continue lodging your returns with the Office of State Revenue. You just don't need to make any payments until January 2021. The other thing I want to look at with the Queensland measures is the COVID-19 job support loans. Applications for this are now open through the Queensland Rural Industry and Development Department. So again, I've got the link there on the slide if you're interested. There are limited funds available. I believe there has been quite a number of applications made already, and a number of businesses are interested in this. So the funds available are $500 million with a maximum loan of $250,000. So it will go quite quickly, I would imagine. So it's available for Queensland businesses and non-profit organisations that have been financially affected by COVID-19. It's essentially a loan to retain your employees and to maintain your operations. As I said, maximum loan $250,000, and it's a 10-year loan. There's no repayments or interest required in the first year. The next 2 years are interest only. There's a 2.5% fixed interest rate, and applications close on the 25th of September, but it's expected that the funds committed will run out prior to that. So if that's something you're interested in, you need to get onto that sort of fairly quickly. All types of businesses are eligible. I'll just quickly run through the type of information they're going to be looking for when you to lodge your application. So they're going to be requiring your financial statements for the 2018 and the 2019 year. Also your personal tax returns for the 18 and 19 tax years. They require various bank account information, tax office integrated client statements, lists of age debtors and creditors, and copies of constitutions and trust deeds, depending on the type of entity. So I guess one thing that brings out, if you haven't already completed your 2019 financial statements and tax returns, that will need to be done before you can lodge your application. So again, contact us so that we can help you out with that as quickly as possible. So I've come to the end of my presentation, and now time to have a look at the questions. So just bear with me for a sec. So I've just unmuted Darren Bowman, who's going to assist me with the questions, and I'll answer them as best I can. You there, Darren?
Yes, thanks, Randall. We've got a couple of dozen questions, so if we don't get through everything this morning, I will send these questions to Randall. We will answer them comprehensively, and we'll send that out with the slide pack today. So going back to the beginning of the presentation, the first question was from John Wood. Does the JobKeeper payment apply for directors, and how is the main employer determined? And what I'll also do is I will copy that into the chat so we can read the question as well. Over to you, Randall.
Thanks, Darren. I'm just trying to get the chat.
That's all right. So if you can't get the chat, Randall, I'll just read the question out again.
So yeah, John Wood's question. So yes, directors of companies are included as far as I'm aware in this. Yeah, so it's basically all employees that were on the books at the 1st of March 2020. As I've said, there's not a lot of detail around a lot of these measures with the subsidy, and yeah, we're just going to have to wait until the legislation comes out and we get at least an explanatory memorandum to be able to answer some of these questions. But yes, directors, any employee will be covered for the $1,500 per fortnight amount.
Thanks, Randall. The next question was, is there any more info on 457 or 482 visa holders in relation to their eligibility?
There is a list of visa holders that are eligible. Just bear with me for a sec, I'll see if I can find that. So what it says is, to be eligible, an employee must be Australian citizen, holder of a permanent visa, protected special category visa holder, a non-protected special category visa holder who has been residing continually in Australia for 10 years or more, a special category subclass 444 visa holder. So that's the list of visa holders. So it looks like it's a fairly wide range of visa holders as far as the normal ones you would expect to see that are essentially working in Australia. Again, there probably needs to be a bit more detail to work out exactly which type of employees are going to be eligible under this system if they're not Australian citizens. But they are looking to extend it to quite a number of people.
Okay, next question was, if a full-time staff member is only with the business for 3 months, are they eligible or not?
There's no restriction on full-time and part-time. The 12-month requirement is only for casual employees. So if they're on your books at the 1st of March, doesn't matter how long they've worked for, if they're full-time or part-time.
Okay, in relation to reduction in income, sorry, just posting that question. Is the 30% reduction assessed month by month or over the quarter?
Yeah, again, there's no detail on that. I think it probably is going to be on a month by month basis. It's just a very general one line that it just says you need to compare it to the 12 months ago and it has to be a full month. I think it probably is going to be a month by month requirement because you are going to have to provide that information to the tax office on month by month basis. You have to provide the names of the employees that are on your books on a month by month basis, and then you'll be paid 1 month in arrears. So that information is going to have to be provided every month, I believe.
So next question, bit of a longer one. What about staff who were sent home before the JobKeeper payment who were deemed at risk? So for example, they're over 70 years old or had a medical certificate as they were a high risk category. Will they be covered in the JobKeeper payment?
What it says is if they've been let go or they've been sent home or whatever, and they're no longer employees, then you need to re-engage them as employees to get the JobKeeper payment.
All right, a good question here from Rhonda was, any PAYG refunds, do they need to be repaid to the ATO at some point in the future?
Is that PAYG withholding or PAYG instalments?
I believe that would be the refund on the withholding.
Oh, on the withholding, that's a tax-free subsidy, effectively, or grant. So no, it doesn't have to be repaid.
Next question, asking for a bit of an example. So in relation to calculations, so can you run through a credit to pay-as-you-go credit again with an example? Say if for the month of February, PAYG is due for 30K. Not sure.
Month of February doesn't actually come into it. So it depends whether we're talking about a quarterly withholder or a monthly withholder. Assuming we're talking about a monthly withholder, if the amount withheld for March, so you don't look at February, it's March. If the amount withheld for March was $30,000, you will get a credit for $30,000 against your March activity statement. If you then withhold another $30,000 in June, you will get a credit of $20,000 in your June activity statement because there's a limit of $50,000. That's the first phase. Then with the second phase, so total amount you're getting is $50,000. You will get another $25,000 in your June activity statement and $25,000 in your September activity statement. So that the June activity statement, you're actually going to get what you're entitled to for the balance of the first phase, and you'll also get what you're entitled to, or half of what you're entitled to in the second phase. Hopefully that makes sense.
Okay, and I think that's basically answered the next question too, around clarity about which quarter's actual PAYG withholding payment is based on. So I think we've answered this next question here.
Yep.
All right. In relation to asset write-offs, got a question from Amanda. The write-off, a write-off of $30,000, is that per item or in total? Example, if I purchase an item for $28,000 and only have $2,000 left, can I purchase something for $5,000 because it is under 30?
It's a per item write-off amount. It was $30,000. It's now been increased to $150,000, but it is still a per item. So you could I don't know how you'd actually do this, but you could buy 2 or 3 items worth $145,000 each. You would get an immediate write-off for 3 times $145,000. So it's per item.
Thanks, Randall. Next question around accelerated depreciation. Can that include rebranding?
Very good question. So it has to be a depreciable item. Rebranding's probably not a depreciable item. Depends on what you're actually buying, what you're expending the money on. If you're putting in place, if you're registering designs or you're registering patents, then they can be depreciated. But if we're talking about things like trademarks or goodwill, that sort of, or sort of branding, I don't think that would be an allowable. It's not really a depreciable item, so you wouldn't be able to claim that. It's not to say that it's not necessarily deductible outright anyway. You just need to look at the particular circumstances and determine whether it's an operating expense or whether it's actually a capital sum. So happy to answer that in a bit more detail if you want to sort of come back to me directly on that, but it's, sorry, the response is a bit general.
That's all right, and I think that goes answering the next question in relation to the instant asset write-off applying to capital works. Or is it the same as the accelerated depreciation rule?
No, the instant asset write-off doesn't apply to capital works. It only applies to depreciable type assets.
Yeah. In relation to the means test for assessment, for the, I think this is around JobKeeper payment. Is the means, this is for Job seeker, yep. Is the means test amount based on what their partner is earning now, or is it still based on last financial year?
No, it's based on what you're earning now, I believe. But yeah, that's something I'd need to actually look into in a bit more detail. The Centrelink rules are quite complex, as I'm sure you all know. But I believe, and again, that was just an announcement on Monday. I don't think they actually have to put in any more legislation. I think that was just a change to the regulation. But I believe it's current income, not prior year income.
All right. In relation to the super release, can the 20% revenue drop be after March 31?
Just let me look at that again. I think that's provided it's after January, I think is what the rule says. Yeah, so well, it talks about working hours for employees. So working hours reduced by 20% or more after 1 January. So if we're talking about now rather than back in January, that's certainly okay, as long as it's after the 1st of January. The income amount, the reduction in turnover is only actually for sole traders. So if their business is suspended or their turnover is reduced by 20%, again, it's after 1 January. So any time from 1 January going forward, if it's reduced by 20%, then that's the eligibility requirement.
Thanks, Randal. In relation to JobKeeper scheme, the next question, will employees who have had a 20% reduction of hours but are still receiving essentially full wage be eligible for early release super?
In that the eligibility requirement is around the hours, I believe they would, yes.
Okay. Sorry, I'm just posting this next question now. If you have an ATO liability account, will the money you would be getting from the ATO for the PAYG payment support be taken to pay that?
Yeah, I did actually refer to that. Potentially that is the case, yes. The tax office haven't come out about that, and I think they would be quite flexible in making arrangements around that. But yeah, potentially they can apply it against other liabilities.
If you do quarterly BAS, but you remit weekly pay-as-you-go withholding through a weekly bank payment to the ATO, how do we get our cash flow credit for pay-as-you-go?
So it's a credit against the activity statement. So regardless of how frequently you make your payments, if you lodge your activity statement monthly or quarterly, that's when you get your credit. It's a credit against the activity statement, so it's not dependent on when you actually pay the withholding amounts.
Thanks, Randal. And our last question, if the business hasn't or wasn't registered, I guess, for GST in financial year 19, how can I prove I lost more than 30% of my income? For example, here, financial year 19, the company did generate income but was under the tax payment threshold.
So I'm guessing this is a question around the new wage subsidy. That's a very good question, and I don't know the answer to it because we don't have any detail on it. The intention is that you just need to be able to show that your income has reduced by 30%. But what it says in the Treasury release is you need to compare it to a full month 12 months ago. And I get that in some circumstances that's not going to be possible because you might not have been trading 12 months ago, or indeed your business might have looked a lot different 12 months ago. So that blanket statement is not going to be able to apply to all situations. So again, we're going to need to see the detail of the actual legislation, perhaps have a look at the explanatory memorandum as to how it's going to be applied, and talk to the tax office, I guess, as to how they're going to apply it, because that's who you have to apply to. So, yeah, sorry, I can't be any more prescriptive than that, but we don't have enough detail to be able to answer that question really. Any more questions, Darren?
Sorry about that, Randall. I had some very loud background noises there. I just turned my microphone off for a second. Just got one question that's come in from Chris. If a school kid who gets 2 hours who basically gets 2 hours a week pay, are they entitled to $1,500 a fortnight now?
I've actually looked at it personally because my daughter's in a similar position. As far as school kids are concerned, they have to be over 16. That's one thing that's in the legislation or the proposed legislation. My understanding is that if they've been on the books of their employer for more than 12 months, regardless of how minimal their hours were, then they will be entitled to the $1,500 a fortnight under this system.
And sneaky last question here from Kenneth. If your business has a trust structure and the owner doesn't draw a wage, do they get the job seeker allowance?
Yeah, potentially you could apply for the job seeker allowance if you're not getting a wage. That's sort of one of the issues that we've had a bit of a problem with, in that you sort of fall outside the system with the cash flow boost. But yeah, if you're not getting a wage, then potentially you could apply for the job seeker allowance. There are potentially other things we could look at, so that might be something we need to look at privately with you, just to work out the best way to approach that. But I believe under the eligibility requirements, you probably would be eligible for the job seeker allowance, yes, and the coronavirus supplement.
And another good question just come in from Jackie in relation to 16-year-old plus kids. Does the $1,500 scheme affect their parents' income assessment?
No, it doesn't. It's got nothing to do with doesn't affect parents' assessment at all. Every employee is treated separately. Naturally, you can only claim the subsidy from one employer, but no, it doesn't have any implications for the parents.
Okay, and just another question here that's come in from Chris. With JobKeeper, if the business is closed like a pub, can we still ask a staff member to come in for cleaning and other maintenance duties? What if they demand that they are allowed to stay at home and don't have to come in, I guess?
Yeah, there's going to be all sorts of industrial relations type questions that come around this. It's all very well the government dealing with the tax side of the subsidy and that, but yeah, there are potentially going to be some industrial relations type issues that need to be dealt with that won't be dealt with in this legislation. So what the rules say are that if you re-engage that employee, it doesn't matter in what circumstances they're re-engaged, as long as they're on the books and being employed, then the employer is entitled to the subsidy, which they then need to pass on to the employee in full. But yeah, if there are some particular issues about negotiating between the employer and the employee as to as to work conditions, that's potentially a Fair Work or a industrial relations type question, I guess.
Unless there's any other questions, that's it from me or from the chat.
Okay, thanks for attending, everyone. Just wanted to, I guess, reiterate again, we're here for you, not physically in the office, but by all means, we're wanting to help everyone out there. Contact us on your usual, the usual ways. Phone us, organise a video link, and we'll take that up, or email us, and we'll get back to you as soon as we can. And yeah, just keep talking to us, and we'll try to help everyone out through this through these difficult times. Thank you for all attending and listening to me. I hope it came through okay.